a $1.1 trillion. That number just vanished from the American economy overnight. And nobody in Washington wants you to know what it means for your wallet. China didn't just reduce their holdings. They didn't just slow down their purchases. They executed a total exit, a complete liquidation. And the shockwave is already tearing through the financial system. The corporate media is burying this story. They're calling it a normal adjustment. They're telling you it's just routine portfolio management. That's a lie. This is financial warfare, and you are the target. For decades, we had an arrangement. It was the deal that built modern America. China manufactured everything: toys, phones, furniture, clothes. We bought it all. They took our dollars and did something very specific with them. They recycled those dollars right back into U.S. Treasury bonds. This kept our interest rates artificially low. It kept their currency weak so they could export even more. It was the perfect cycle. It subsidized your entire standard of living: your cheap mortgage, your affordable car loan, your credit card rewards. All of it was possible because China was financing America's debt addiction. That deal is dead. The official data shows China holding around $760 billion in U.S. treasuries. But that's the sanitized version. That's the number they want you to see. The real exposure is much deeper. When you add in agency debt, entities like Fannie Mae and Freddie Mac, the true number explodes to over $1.1 trillion. But here's where it gets darker. China has been using ghost accounts. They route their sales through custodian banks in Belgium, Luxembourg, and the Cayman Islands. They mask their tracks. This means the official numbers are already outdated by the time you see them. By the time the Treasury publishes the data, China has already dumped another $50 billion. They are moving in the shadows, and they are moving fast. The latest reports confirm it. China is liquidating U.S. assets at a pace we haven't seen since the 2015 currency crisis. But this time, it's not a crisis. It's a strategy. This is deliberate. This is calculated. This is revenge. You need to understand the context. This isn't random. This is retaliation. In 2024, the U.S. imposed crushing tariffs on Chinese goods, 60% tariffs across the board. We essentially told Beijing their products were no longer welcome in American stores. We weaponized trade. We thought we were punishing them. They didn't get angry. They got strategic. China looked at their reserves and asked a simple question: why are we funding the government that's trying to destroy us? Why are we lending money to our enemy? The answer was obvious: stop. But they didn't just stop buying new bonds. They started selling the old ones, aggressively, relentlessly, every single month. And they're replacing those U.S. bonds with something the American government can't control: gold. China has been buying gold for 28 consecutive months. That's a record. They're not doing this because they like shiny metal. They're doing this because they saw what happened to Russia. In 2022, the U.S. froze Russia's dollar reserves overnight. Hundreds of billions of dollars gone, locked, inaccessible. Russia couldn't touch their own money because it was trapped in the Western financial system. China learned the lesson. They realized that holding U.S. debt is not an asset, it's a hostage, it's a weapon pointed at their own head. So they're getting out, they're trading paper promises from a hostile government for physical gold that nobody can freeze, sanction, or confiscate. This is a geopolitical divorce. And like any divorce, someone is going to lose the house. Here's where this becomes your problem. The U.S. government is addicted to debt. We run a $2 trillion deficit every single year. That means we spend $2 trillion more than we collect in taxes. To keep the lights on, to pay the military, to fund Social Security, we have to sell billions of dollars in new bonds every single week. It's like paying off one credit card by opening another. It only works if someone keeps giving you new credit cards. For years, China was that someone. They were the guaranteed buyer at the auction. They showed up every week and bought a massive chunk of America's debt. They were the safety net. Now, not only are they gone, but they're also flooding the market with their old bonds. Imagine every house in your neighborhood going up for sale on the same day. Zero buyers. What happens to prices? They collapse. The bond market works exactly the same way. Too much supply, not enough demand. Prices crash. And here's the ironclad rule of bond markets. When bond prices fall, interest rates rise. Immediately. Automatically. There's no escape. You've been taught a lie. You've been told the Federal Reserve controls interest rates. That's only half true. The Fed controls short-term rates, the overnight rate, the rate banks charge each other, but they don't control long-term rates. The market controls those. And the market is in panic mode. The Fed could hold a press conference tomorrow and cut rates to zero. But if China dumps $100 billion in bonds that same afternoon, your mortgage rate will spike anyway. The Fed has been neutered, their power has been neutralized. This is what economists call fiscal dominance. In plain English, it means the size of the debt pile matters more than anything the central bank does. The debt is so massive, so overwhelming, that normal monetary policy doesn't work anymore. We are watching the Federal Reserve become irrelevant in real time. The 30-year mortgage rate tracks the 10-year Treasury yield. It's a mathematical relationship. It's not a guess. It's not a prediction. It's a formula. Right now, the 10-year Treasury yield is climbing. It's climbing because China is selling. When that yield hits 5%, mortgage rates hit 7.5%. When it hits 6%, mortgages hit 9%. 9% mortgages. Let that sink in. If you're trying to buy a $400,000 house, your monthly payment just doubled compared to 3 years ago. That's not inflation. That's a pricing out of an entire generation. The housing market will freeze. Buyers will disappear. Sellers will be trapped. Prices will have to come down because nobody can afford the payments. But they can't come down enough because sellers still owe their own mortgages. It's a gridlock, a total paralysis, and it destroys the wealth effect that keeps the American economy running. Here's the nightmare scenario that keeps Treasury officials awake at night. It's called the doom loop, and we just entered it. China sells bonds, interest rates spike, the housing market crashes, Americans feel poorer, they stop spending, the economy enters recession, tax revenues collapse, the government deficit explodes. To cover the deficit, they have to sell even more bonds. But selling more bonds pushes interest rates even higher, which crashes housing even more. It's a death spiral. Each step makes the next step worse. There's no natural break, there's no exit ramp. And China knows this. They studied the American economy, they found the weak point, they're pressing on it with surgical precision. It's not just homeowners who are in danger. Corporate America is sitting on a ticking bomb. In 2020 and 2021, big companies borrowed trillions of dollars at near zero interest rates. Free money. They used it to buy back stock, pay dividends, and fund expansion. But those loans have a maturity date. They're coming due. Right now, these companies have to refinance, they have to roll over their debt, but the interest rate they borrowed at was 2%. The rate they have to refinance at is 7%. Imagine your mortgage payment tripling overnight. That's what's happening to major corporations across America. Many of them won't survive. They'll go bankrupt. They'll lay off thousands of workers. The stock market is ignoring this because it's betting on a Fed rescue, but the Fed can't rescue anyone. Not anymore. Not when China is actively working against them. There's a technical detail you need to understand. It's boring, but it's critical. The Federal Reserve has a facility called the reverse repo. Think of it as an emergency reserve tank. For 2 years, this tank held over $2 trillion in cash. It was a buffer, a shock absorber. When the government needed to borrow money, they could tap this reserve without disrupting the market. It kept interest rates stable. It prevented crashes. As of this month, that tank is empty, drained. The $2 trillion is gone. This means every single dollar the government borrows now has to come directly from the banking system, from your bank's reserves. This is the worst possible timing. We're hitting a liquidity cliff at the exact moment China is dumping over $1 trillion in bonds. It's a perfect storm, and there's no cushion left to absorb the impact. Remember Silicon Valley Bank? Remember how fast it collapsed in 2023? That wasn't an isolated incident. That was a warning shot. According to the FDIC, American banks are sitting on over $600 billion in unrealized losses right now. Here's how it works. Banks take your deposits and invest them in safe government bonds. But when interest rates rise, the value of those old bonds falls. The banks are holding bonds they bought at 2% interest. Those bonds are now worth 30% less because new bonds pay 5%. As long as the banks don't sell, they don't have to admit the loss. They can hide it. But if you get scared and go to the ATM to withdraw your money, the bank has to sell those bonds to pay you. When they sell, they lock in the loss. They go bankrupt. China is making this worse. Every bond they sell pushes rates higher. Every rate increase makes the hole in the bank's balance sheets bigger. This is economic warfare aimed directly at the foundation of American finance. For 50 years, America had a secret weapon. It was called the petrodollar. If you wanted to buy oil anywhere in the world, you had to use US dollars first. This created permanent global demand for our currency. That era is ending. China is now the world's largest oil importer, and they're paying in yuan. They've set up currency swap agreements with Saudi Arabia, Russia, and Iran. They're buying oil without using a single American dollar. This is a direct attack on what economists call our exorbitant privilege. For decades, we've been able to print unlimited dollars because the world needed them to buy energy. That need is evaporating. If the world needs fewer dollars, they have zero reason to hold U.S. Treasury bonds. The demand for our debt is collapsing from both sides. China is selling from the supply side, and the petrodollar is dying on the demand side. We're being squeezed to death. You need to watch what the billionaires are doing, not what they're saying, what they're doing. Jeff Bezos is selling Amazon stock. Mark Zuckerberg is selling Meta. Warren Buffett is sitting on a record $325 billion in cash. They see what's coming. They're moving down the risk pyramid. They're getting closer to real assets, land, commodities, gold, things that can't be printed, things that politicians can't destroy with a signature. Central banks around the world are doing the same thing. According to the World Gold Council, central banks bought more gold in 2023 than they have in 55 years. They're not buying gold because it's fashionable. They're buying it because it's the only neutral asset left in a world of financial warfare. Gold can't be frozen by sanctions. It doesn't rely on a promise from any government. It's the universal exit door, and the smart money is running for it. For 40 years, financial advisors told you the same thing. Put 60% in stocks, 40% in bonds. It was the golden rule, the safe strategy. Bonds were your shield. If stocks crashed, bonds went up. They protected you. That relationship is broken, shattered. In an inflation crisis, stocks and bonds fall together. We saw it in 2022. We're about to see it again, but worse. Holding a U.S. Treasury bond today is not a risk-free return. It's return-free risk. You're getting paid 4.5% interest while inflation eats 6% of your purchasing power. You're locking in a guaranteed loss. The old playbook doesn't work anymore. You need a new strategy. You need to think like China. Trade paper for real things. Trade promises for assets. Trade the system for independence. When a currency collapses, only 3 types of assets survive: hard commodities, productive land, and monetary metals. Hard commodities, oil, copper, lithium, things the world needs to function. China is buying mines in Africa. They're buying refineries in South America. They're securing physical supply chains. Productive land, farmland, timberland, water rights, things that generate real value regardless of what happens to paper money. Bill Gates is now the largest private farmland owner in America. That's not a coincidence. Monetary metals, gold and silver, the only money that has survived every currency collapse in human history. No government can print it, no central bank can devalue it. It's the ultimate insurance policy. The government knows people are waking up. They know you're starting to question the system, so they're preparing a trap. It's called a central bank digital currency, a CBDC. This is the ultimate control mechanism. Every dollar you spend is tracked. Every transaction is monitored. They can turn off your money with a keystroke. They can impose negative interest rates, which means they take money out of your account just for saving. This is financial slavery dressed up as innovation, and they will sell it to you as convenience and safety. Don't fall for it. The goal is to trap you inside the dollar so they can inflate away their debt using your savings. If you exit the system, you defeat their plan. That's why they will try to stop you. That's why you need to act now while the door is still open. Right now, you can still convert your digital numbers into real tangible assets. No restrictions, no penalties. You can buy gold without reporting it. You can move money internationally. You can protect yourself. This window will not stay open forever. When the crisis accelerates, they will impose capital controls. They'll restrict gold purchases. They'll freeze accounts. They'll do whatever it takes to keep you locked in the burning building. China has already made their choice. They chose hard assets over paper promises. They chose independence over dependency. They're building an economic fortress, while America builds a house of cards. You have the same choice. Will you be the person holding worthless paper when the music stops, or will you be holding the things the world actually needs? The $1.1 trillion sell order isn't a future threat. It's happening right now. The bond market is cracking, the banking system is fragile, the Fed is powerless, and the American consumer is about to learn a very painful lesson about living beyond your means. This is not a prediction. This is mathematics. Debt has consequences, printing money has consequences, weaponizing the dollar has consequences, and China just showed us what those consequences look like. The storm isn't coming. It's here. The roof is leaking. The foundation is cracking. You can either build an ark or pretend everything is fine. But there's one specific indicator that tells you exactly when the Federal Reserve will panic and turn the printers back on. It's flashed before every major crisis since 2008. And it just lit up red this week. Click the next video to see the chart that scares the Fed the most. Your financial survival depends on what you do in the next 30 days. I'll see you there.